C2 structured investments can provide investors with opportunities to invest with capital protection. Capital protection is like insurance for your investment. Capital protected investments may suit investors that want to invest in an asset, such as shares, but are concerned that the asset may fall. Capital protected investments are designed, as the name suggests, to protect investors' money. Typically, the capital protected level is preset to protect between 80 and 100% of investors' money if the asset was to fall in value, yet still provide investors with upside potential. For example, an investor wants to invest in a stock market but is nervous that it may fall. He finds a 100% capital protected stock market investment with a time frame that suits his investment horizon. He decides to invest $10,000 as well as paying any applicable fees. The investment returns are structured so that at maturity, it will pay him the greater of his initial $10,000 plus any positive stock market performance, or, in the case of negative stock market performance, his initial $10,000 is returned to him due to the capital protection feature. Key advantage of capital protection is maintaining purchasing power. Did you know that if your investment falls by 30%, it takes a 43% positive movement to get back to your original position? So in the case where an asset has fallen and the capital protection is paid out, the investor may be able to use his $10,000 to re-enter the stock market at the lower levels and benefit from any potential recovery. As with all investments, there are risks. Capital protected investments have their own unique risks. For example, there still needs to be sufficient positive performance in the underlying asset, such as the stock market, to generate a total net positive return, including any fees and costs paid by the investor. The capital protection feature is usually only applicable at the maturity of the investment and may not apply if the investment ends early for any reason. Investors need to consider counterparty risk. There is a risk that counterparties default on their obligation to pay the capital protection. To minimize this risk, C2 Specialist Investments only contracts with investment-grade counterparties. Capital protection does not protect against inflation, and capital-protected structured investments carry higher risk than and should not be confused with other capital-protected investments such as bank savings accounts or term deposits. Capital-protected investments offer investors a unique investment solution for an investor's portfolio. To find out more about capital-protected investments, please contact your financial advisor or C2 Specialist Investments.